Alright, listen up. You want to get in the game, you want to make some money, you hear about stocks on the news, on your phone, everywhere. But what are they? It's simple, really. A stock is a tiny piece of a company. That's it. When you buy a stock of, let's say, Apple, you own a tiny sliver of Apple. You're a part owner. It's like owning one single brick in a giant skyscraper. It might be small, but it's yours. And when that company does well, your little piece becomes more valuable. Booyah! That's the magic of the market, my friend. It's your ticket to the show. So why do we do this? Why do we trade? For one reason, to make money. We're not here for a haircut. We're here to build wealth. When you buy a stock, you're betting on that company's success. You're saying, I believe in you. I believe you're going to grow, innovate, and make a ton of cash. And when you're right, the value of your stock goes up. You can then sell it for more than you paid. That's called a capital gain, and it sounds beautiful, doesn't it? It's the sound of victory. This is how you can make your money work for you even while you're sleeping. But hold your horses. It's not all sunshine and rainbows. This is a big league game. And there are risks, huge risks. Just as a company can do well, it can also do poorly. If the company you invested in starts losing money or makes a bad decision, the value of your stock can go down. And I mean, way down. You could lose some or even all of your initial investment. That's the bear growling at your door. It's a tough pill to swallow, but you have to know the risks. Trading isn't a get-rich-quick scheme, it's a battlefield. You have to be prepared for both the wins and the losses. The thrill of the game is undeniable, though. It's about more than just numbers on a screen. It's about being connected to the pulse of the economy. You start to understand how the world works. You pay attention to new products, to company news, to global events. You become smarter. You're not just a spectator anymore. You're a player on the field. You're making decisions that could shape your financial future. It's exciting, it's dynamic, and if you do your homework, it can be incredibly rewarding. So, are you ready to play? Let's get you in the game. Ready to suit up? You can't just walk onto the trading floor and start yelling. You need a broker. Think of a brokerage account as your personal gateway to the stock market. It's the tool that lets you buy and sell stocks. In the old days, you had to call a guy in a suit. Not anymore. Today, you can do it all from your phone or computer. You need to find an online brokerage firm. There are tons of them out there. Fidelity, Charles Schwab, E*Trade, Robinhood. They all want your business, so they make it super easy to sign up. Opening an account is simple. It's like opening a bank account, but for stocks. You'll go to the brokerage's website or download their app. You'll need some personal information ready. I'm talking about your name, address, date of birth, and your social security number. This is all standard stuff. They need to verify who you are. It's for your own protection. They'll ask you some questions about your income and your experience with investing. Don't be scared, just be honest. They're not trying to trick you. They just need to know what kind of investor you are. The whole process usually takes less than 15 minutes. Next up, you have to fund the account. You can't buy stocks with good intentions. You need cold, hard cash. You'll need to link your bank account to your new brokerage account. This is usually a secure and straightforward process. You can then transfer money over. How much should you start with? Listen to me. Start small. I'm serious. Don't go betting the farm. Start with an amount you are completely 100% willing to lose. Maybe it's $500, maybe it's 100. The amount doesn't matter as much as the experience you're about to gain. Think of it as your tuition for Wall Street University. Once your money is in the account, you're ready for action. You are officially on the launch pad. Take a moment to look around the platform, click on all the buttons, see where the buy and sell buttons are, check out the research tools they offer. Most brokers provide a lot of free information like news, charts, and analyst reports. Get familiar with the layout. You don't want to be fumbling around when you're ready to make your first move. This is your command center. Know it inside and out before you go into battle. You're almost there. This is the moment of truth, the big question. What stock do you buy? Don't just throw a dart at a list of names. That's gambling, not investing. I have a simple rule for you beginners. Buy what you know. Look around you. What phone are you using? What car do you drive? What coffee did you drink this morning? What stores do you shop at? Start with companies that are part of your everyday life. If you love your Nike sneakers and see everyone else wearing them, maybe Nike is a company worth looking into. This gives you a natural advantage because you're already a customer. You understand the product. Once you have a few companies in mind, it's time to do your homework. Homework. I can't say it enough. Don't just buy a stock because your cousin's friend said it's a sure thing. There are no sure things. Go to the company's investor relations website. Read about what they do. Are they making money? Is their revenue growing year after year? Who are their competitors? You don't need a PhD in finance to understand the basics. You just need to be curious and willing to read. Look for strong, stable companies that have a long history of success. Don't chase speculative penny stocks. Let's talk about diversification. This is a fancy word for a simple idea. Don't put all your eggs in one basket. Even if you are super confident in one company, you should never put all your money into that single stock. What if something unexpected happens? A product recall? A new competitor? Your entire investment could be wiped out. Instead, try to buy a few different stocks in different industries. Maybe one tech company, one consumer goods company, and one healthcare company. This spreads out your risk. If one stock goes down, the others might go up, protecting your portfolio. When you're ready to buy, the process is easy. You'll type in the company's ticker symbol, like AAPL for Apple or AMZN for Amazon. You'll specify how many shares you want to buy, then you'll choose an order type. For beginners, a market order is the simplest. It just means you want to buy the stock at its current market price. Click buy, confirm your order, and kaboom! You're a shareholder. Congratulations! You've made your first trade. It's a huge step. But remember, this is just the beginning of your journey. The real work starts now. You've bought your first stock. You feel the rush. Now what? Now you learn to be patient. The stock market is not a slot machine. You don't get instant results. Prices will go up and down every single day. That's called volatility, and it's normal. Don't panic and sell every time your stock drops a little. And don't get too cocky when it goes up. You have to have a long-term mindset. We're not day traders trying to scalp a few pennies. We are investors building wealth over years, not days. Patience is your greatest weapon in this game. Let your good companies grow. You're going to make mistakes. Let me repeat that. You will make mistakes. You will buy a stock that goes down. You will sell a stock that then goes way up. It happens to everyone, even me. The key is not to get emotional. Don't let fear or greed control your decisions. When you lose money on a trade, don't get angry or try to win it back with a risky bet. Instead, treat it as a learning experience. Why did it go down? Did you miss something in your research? Was it just bad luck? Analyze your mistakes, learn from them, and become a smarter investor. Every loss is a lesson. Never stop learning. The market is always changing. New technologies emerge. New leaders take over companies. New trends shape the economy. You have to stay on top of it. Read financial news every day. Watch business channels. Listen to podcasts. Follow smart people on social media. The more you learn, the more confident you will become. Your knowledge is your power. The world is full of information, and most of it is free. There's no excuse for being an uninformed investor. Dedicate a little bit of time each week to your financial education. It's the best investment you can ever make. Finally, remember why you started. You're doing this to build a better financial future for yourself and your family. It's a marathon, not a sprint. Start small, be patient, do your homework, and learn from your mistakes. Over time, your knowledge and your account can grow. It takes discipline and courage, but you can do it. You are now in the game. You are an investor. You are taking control of your financial destiny. Now get out there and make some money. Booyah.